Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us again here at AusBiz as we take a look at what happened overnight, and indications in the White House of signs of progress in those US tariff negotiations helped global equities rise on Wall Street. The major indices were high, with the S&P registering its sixth straight session of gains. The Dow was led by gains in Honeywell after reporting a rise in adjusted profit for the first quarter, and Coca-Cola closing higher after beating revenue and profit estimates. United Parcel Service slipped after its quarterly results and said it would cut 20,000 jobs as it sheds deliveries for Amazon. And General Motors and JetBlue have pulled their annual guidance despite strong quarterly results from the car maker, with President Trump set to soften the impact of auto tariffs. Wells Fargo gained after announcing a stock buyback program of up to $40 billion. And as President Trump marks 100 days in the White House, a glimpse of the winners and losers among US stocks shows data analytics provider Palantir surging some 60% as the Department of Defense prioritises its software. Conservative cable news channel Newsmax, which debuted at the end of March, has risen more than 60% since its IPO. And the gold miners surging, tracking the bullion price, with the world's largest gold miner, Newmont, up around 30%. And Canada's share market rose as the governing Liberal Party, led by the newly installed Mark Carney, claimed victory in the general election in a result seen as a rebuke to Donald Trump's trade policies. Well, US consumer confidence has slumped to a 5-year low on growing concerns over the impact tariffs are having on the economic outlook. And US job openings have fallen to the lowest level since September to 7.19 million, although a decline in job losses suggests that the labour market has remained solid. And the US trade deficit in goods widened to a record high in March as businesses increased efforts to bring in merchandise ahead of the tariffs. Meanwhile, the Trump administration has taken measures to reduce the impact of automotive tariffs on foreign parts used in US manufactured cars, and China has exempted ethane from its 125% tariff on US imports. In terms of treasuries, the 10-year yield falling for the sixth consecutive day to a 3-week low of 4.18%, the 2-year down to 3.66%. And the US dollar has lifted while also benefiting from month-end buying, the Aussie trading at 63.9 US cents. And Bitcoin is at just over 94,000 US dollars. Oil prices, they've fallen to about 2% to a 2-week low as investors brace for OPEC Plus to boost its output. Brent crude futures at $64 a barrel. Copper fell more than 0.5%. Iron ore off slightly at $99 a tonne. And gold falling on perceived easing of US-China trade tensions. Those gold futures close to 4% lower at $3,333 an ounce. So for more, particularly what we're seeing on Wall Street, Howard Silverblatt joining us from S&P Dow Jones Indices. Howard, welcome back. Good to see you. Well, it seems to me as though markets are trying to find more of an optimistic view of how these tariff policies are playing out at the moment. And I mean, we're hearing from the White House that deals are close or are being made. Should we believe them?
I not necessarily believe them, but the street is, as you said, very optimistic that something will happen. Today's auto announcement is another obvious example that a deal will be reached. The question is how quickly it will be reached and at what levels it will be. So the street, as you said, 6 days in a row, the S&P is up in price, and we are 0.91% away, less than 1% away from being positive this month. So if we get a nice day tomorrow, we can get a lift. You may have to lead with the item that April is up after all the volatility, after being down 21% at one point, $11 trillion for the index itself. We could be positive. Down 0.9 seems like almost a blessing. Again, we're seeing trades buying in. There is some risk, not as much risk as should be probably if you believe that we're getting out of this at this point in time. But there's definitely risk buying, quality cash flow companies and dividends issues with secure cash flow, obviously, are the premiums now. But again, We're still about 9% off our high back from February, and it's going to be a volatile month going forward, but there's definitely optimism that something will be worked out, and that don't always trade on the headline that you're seeing come over or social media.
Howard, how's this been reflected in the volatility index at the moment?
Enormous volatility. I mean, we're back down to the 23, 24 level for the VIX itself, which is a little bit high, but not that bad. We were at 60. Okay, that is a chart that you're putting up there shows it's unheard of. We haven't seen that since 2011 or so, when it went up to 80 at one point. And so the concern, the unknown, is the major force here. Again, it's still tariffs, but the unknown, and that's what's the concern. You don't know where it is. Put out any kind of plan you want, and the companies will deal with it one way or another. We're looking at earnings right now, which were about 45% reported, coming in a tick down from last quarter, but we can't use the forward ones because the estimates don't include tariff costs. Analysts have no better idea of how much to quantify to put into that estimate for Q2, 3, and 4 than the CEOs do. They're vague, they're general, so we don't know where the earnings are going. We don't know where the tariffs are. And you've got a higher chance because consumers are pulling back, and the sentiment numbers, as you've spoken about, higher chance of a recession coming up.
Yeah, how do you make those decisions as an investor, though, if you're seeing what, particularly in terms of guidance, and I mentioned there GM, another company that's pulling guidance at the moment because they just don't know.
They don't, because there's too many unknowns at this point, and it changes too quickly. But again, the investment that we're seeing, a lot of it is going with higher quality companies that higher caps also in general, because they have better financing and they have better access to financing, who can live through a situation if you get a downturn, if you get consumers pulling back more, the government pulling back, businesses, the supercomputer today that we saw, pulling orders and pushing them forward at this point. So the quality is important, and there's a lot of people going into dividend income stocks, and there we've seen a big flight to quality in some of the treasuries, which more than made up for the foreign money that was buying treasury and are no longer doing it. The U.S. people are doing that now, but we are seeing risk people taking risks. We try to trace it down. Some of the analysts have that a lot of this coming from IRAs and self-directed retirement, which means it's younger people, they're in tax deferred, so they can afford to take the hit because they're going to be in there more for decades, as compared to, say, a cash account where you've got to worry about your own liquidity and where the levels are.
Now, in terms of earnings, some big ones ahead this week. 4 of the Mag 7. What should we be expecting, do you think, Howard? So we're looking at what? Apple, Amazon, Meta, Microsoft.
Yeah, well, Microsoft is tomorrow, and Apple after that. They should have decent numbers. Microsoft, as example, sales should increase a little bit over 10%. With earnings maybe a little bit under 10%, so you got some margin decline there, slight statistical, but good numbers. The question is going to be going forward. For a software company like Microsoft, it's going to be a little bit calmer, and they may be able to give you some more specifics about what's on subscription, what they going forward. But Apple is going to be the big question. How much comes from India? Where do you see the tariffs coming? Again, not so much about yesterday, but going forward, how much can you pull forward on here? So Apple's going to be the big test on there, because that has the most unknowns, because it's susceptible the most to the tariffs.
And just in terms of the data that we're seeing, I mean, you touched on, obviously, consumer sentiment falling away quite sharply, given the uncertainty and the impact, likely impact of tariffs. What are you seeing with those jobs numbers? So some key numbers coming to us this week, of course.
Yeah, the JOLTS, of course, were, as you said, 7.1 million, so that was down in there. Tomorrow we have the ADP, should be about 125,000, and then the unemployment, the main numbers coming out Friday from the government, potentially 130,000. We'll expect all private jobs in there. The U.S. government is not hiring too many people these days. And the expectation and hope is that the unemployment stays at 4.2%. Keeping the unemployment rate low permits all that income to come in, people to spend. They may spend less, they may be shifting it around, but if you have a job, you're spending. If you don't, you're not, and the government's supporting you, or you're taking out of savings. So the unemployment number is going to be the major one to watch on Friday, and again, maybe about 130,000 net new jobs.
All right. And what are you seeing with the US dollar at the moment, Howard? And also gold is interesting, isn't it? It has come off once again on perceived, perhaps, breakthroughs in those trade negotiations.
Yeah, it's holding up at that 3,300 level there. Obviously, if it hit 35 at one point, we saw the gold funds actually get a lot more money. That's different than actual gold holdings. Gold holdings very often is done by central banks, and that's what helped get it up to that 3,500 level, which is pulled back on there. But obviously, gold works best traditionally with more turmoil. Not to say we don't have turmoil now, but the perception is that it may decline over the coming 2-3 months. And again, the tariffs, the hope for the tariffs so that some kind of agreement could be made by the end of June. So the House and the Senate could start working on it when they come back from recess July 7th at this point.
Howard, great to get across what you're seeing there. Thanks for joining us from S&P Dow Jones Indices.
Thanks for having me.
Let's focus now on what we can expect when we get going in a couple of minutes' time. SPI futures indicating another positive start, up around 0.33%. Join us for the open in just a couple of minutes.